Welcome back to this Money Control live stream. You're watching Closing Bell with me, Nandita, Khemka, and my colleague.
Hello there, I am Yatin Mota.
Well, Yatin, a truncated session, and ahead of tomorrow's market holiday, we saw very range-bound moves in the market today. I don't know whether to call it the calm before the storm because we have the monthly expiry on Thursday.
Yes.
Maybe that's the day when we will see a lot of volatility. But today it was a steady move, range bound within a narrow band. The Sensex in fact managed to end the day in the green, a 140-point up move coming in on the Sensex, breaking out of a 5-day losing streak. But the Nifty, it was trying to clutch on to that green zone, but just about in the dying minutes of trade, it gave in fact caved in rather, and ended extremely flat, just about 5 odd points lower. So, it was trying to end the day in the green, didn't really happen. But, let's see what really happens on Thursday. That's the day when we have the monthly expiry, and, just 2 more sessions to go for the month rather. And that would, of course, we'll see that longish losing streak of 5 months, and that's the longest losing streak in almost 2080 or so. Yes, that's the texture. But for today, Midcap index, the sell-off continues in the broader end of the markets, 0.6% kind of cut coming in on the Midcap index. The advance decline ratio was also, in favor of declines once again, 2:3. That was the advance decline ratio today. But the VIX, Yatin, India VIX has cooled off by almost 5%. So volatility has cooled off today. But Thursday we'll see, some bit of increase, I guess, because of the monthly expiry. In terms of sectors then, autos and FMCG, these were among the gainers today. FMCG broke out of a 15-day losing streak yesterday. Today building on those gains, but IT continues to see selling pressure. And Yatin, IT pack rather will also be in focus on Thursday. NVIDIA reports numbers tomorrow. Yes. And, of course, a lot has been happening. There are a lot of slowdown concerns, and, let's see how NVIDIA fares in the quarterly earnings. That would perhaps decide which way the IT pack will move. Aside of that, you had metals, top laggard in terms of sectors. Even realty continues to see selling pressure. I think a lot of these realty names like Godrej Properties, Brigade Enterprises, all those stocks were losing today. In terms of individual movers, M&M continues its upward ride. Second day of gains, top Nifty gainer today as well. Bharti Airtel, another one, Bajaj Finance. On the flip side, Hindalco was the big laggard, followed by pharma names like Dr. Reddy's, Sun Pharma, Wipro, TCS continue their sell-off, and Dr. Reddy's trend was also among the laggards today. But Yatin, from the broader end of the markets, Tata investment was in focus. Tata Capital IPO has got the green signal. So that stock was up somewhere around 6%.
Absolutely, and across the board there was select buying in mid-cap stocks. However, the advance decline ratio in the market was 1:2, which clearly indicates that the mid-caps still witness some bit of selling pressure. Market closed almost flattish. However, the mid and small cap index was 0.5% lower. Vijaya Diagnostics 15% higher, Zensar Technology 6% higher. Narayana Hrudayalaya in a market like this stock is looking at a 52-week high. The stock was up 5% today. What was not doing well is Dr. Lal Pathlab. The stock will be excluded from the future and option segment. Probable reason for the sell-off, but yes, 7% down for that one. Usha Martin, Aditya Birla Real Estate, all of these stocks witnessing 4 to 5% kind of a pressure.
That's true. I think, in fact, Vijaya Diagnostics, I think one of the top laggards yesterday has staged a very good comeback and, in fact, saw hectic buying interest as well in today's session. But on that note, let's take a look at the stocks that are on our radar this afternoon. I want to begin by talking about defense stocks. I think they have corrected quite a bit. In fact, some of these stocks are down as much as 50% from their peak, right? But today, there was a positive note from JP Morgan on this space. They've noted that the stocks have halved from their life highs, but there is value emerging now after the kind of correction that these stocks have seen. In fact, the froth may have cleared after this sharp fall in some of these stocks. JP Morgan is confident on the structural growth story of defense stocks. It says that India's defense capex, domestic manufacturing push, these are not just short-term fluctuations, but they are long-term trends, and they are here to stay. And over the long term, the potential for growth and investment in defense stocks remains intact. There are concerns, there have been concerns, and which is why defense stocks have been seeing continued sell-off even after budget because of the budgetary allocation towards the defense sector that saw a modest rise of 4.5%. That was below market expectations, right? That is something that led to the sell-off. There are some other factors also that JP Morgan has pointed out that could have led to the sell-off. there has been a slowdown in the domestic industrial sector, right? This was an election year and there was a slowdown in government spends as well, and which of course led to negative market sentiment even when it comes to the defense names. Also the fact that there are concerns over geopolitical developments and higher import higher spend towards imports that could have impacted spends on domestic or make in India initiatives, but that according to JP Morgan is grossly overstated. The concerns would have been around the fact that global geopolitical risks may lead to more reliance on foreign defense imports in the short term, and that could lead to reduced capital spending on the domestic projects. But overly exaggerated, that's what JP Morgan has called this concern. Now, they have pointed out that the strengthening defense ties with US will be a net positive in the long term for the Indian defense companies as well. They have maintained their overweight stance on Bharat Electronics and Hindustan Aeronautics. In fact, if you look at HAL, their target price is at 4,958 on the stock, which implies a 49% upside from current levels. The stock has seen a sizable correction, but JP Morgan believes that stocks could go back to those highs once again. BEL, Bharat Electronics, that's the preferred pick, where the target price is at 343 rupees, which also implies a 33% upside from current levels. I want to quickly point out what BEL had done during earnings. They had retained their order inflow guidance of 25,000 crore rupees for FY25, despite the fact that till date they have seen only 11,900 crore rupee worth of inflows, but they are expecting to receive large orders in the coming weeks, which are at finalization stage. So they have in fact they are confident of maintaining their order inflow of 25,000 crore rupees. They expect the order momentum to continue into FY26, and they've also said that margins will remain around that 24 to 25% level in the upcoming years as well. And which is why I think JP Morgan has also pointed out that Bharat Electronics is their preferred pick in the defense space. Absolutely. Sizable correction, but valuations are attractive at these levels.
And for Bharat Electronics, Nandita, the results for the third quarter were quite good. Post the numbers, the stock also saw some rally. Obviously, there is some profit taking at higher levels. Hindustan Aeronautics, mind you, the 52-week high is 5,600, and today the stock is at 3,200, odd. And as you're mentioning, almost 40-45% kind of correction in all of these frontline, defense counters.
Yeah.
Thankfully, Bharat Electronics and HAL, their market capitalization is very large. Probably there could be some institutional support moving forward. Let's see whether or not there is some frenzy again in these defense names after the correction. But what is interesting is the stock of IEX. In a weaker market today, the stock of IEX was up nearly 2% intraday. Axis Capital has come out with a note wherein they are maintaining an ad on IEX, which is Indian Energy Exchange, with a target of 186. They believe that the fourth quarter electricity volumes so far till Feb are almost 30% higher year on year. And assuming IEX can maintain the same growth rate in the rest of Q4, there is a chance that the overall FY25 volumes will be 4% higher than estimates. In fact, another hangover on the counter is market coupling, which has been pushed by the Power Ministry. However, according to IEX management, they believe that the stimulation results have shown that there is a very low probability with respect to implementation of market coupling, especially to do with the electricity prices, which could take away market share from IEX. Probably this is the reason why the stock has corrected so sharply from the record levels. And also talking about the exchange derivatives, that is something that will be watched out for, because the regulator here is SEBI. So IEX on the back of the brokerage note should be in focus. Stock at 186. As I mentioned earlier, Axis has a target of almost 186 on the counter.
That's true. I think the stock has seen a sizable correction from levels of 245. That was the 52-week high. But mind you, it has done fairly well. Last 1 month, it has given positive returns, although just 1.5%. But given the fact that we've seen quite a bit of sell-off in the mid-cap end of the markets, and quite a few stocks have corrected in excess of 20-25%, this stock has actually shown resilience. Another stock that was showing resilience in today's market was 361 WAM. This stock at one point in time was up somewhere around 5% or so, but ended the day higher by almost 3% or thereabouts. Quite a few brokerage reports on this particular stock, and they are quite positive after its recent acquisition of Batliwala and Karani Securities, BNK Securities, for 1884 crore rupees. Now, this is a full service mid-cap brokerage, and it will complement 361 WAM's wealth offerings for ultra HNIs, especially in the small and mid-cap segment. Some reports then, let's go over them one by one. Citi, it has maintained a buy rating. Target price is at 1275 rupees. In fact, it has said that the equity broking revenue of 361 WAM may grow by 15 to 20% over the next 3 years, and BNK in fact may contribute around 75% to that equity broking revenue growth. So that will be a sizable contribution from BNK. Of course, they've also mentioned that 361 WAM has a very diversified asset base, which makes this particular stock their preferred play in the capital market space. Moving on to Motilal Oswal, they have a buy rating. Their target price is also in excess of 1250 rupees. In fact, they've mentioned some of the takeaways from that analyst call on this particular acquisition. But Motilal Oswal also maintains that this acquisition is a good fit. And analysts in fact also said that this deal is expected to be EPS accretive by 3 to 5%, and they are expecting a 15 to 25% kind of revenue CAGR, compounded annual growth rates in revenues for BNK in 3 to 5 years, and that will be driven by the existing and new customers. Of course, so the company is also poised to gain market share in the current market correction, because clients are holding on to 10 to 20% of cash for equity deployment as well. Grow quite well over the next 12 to 18 months. The last one is Jefferies. They have cut their target price from 1350 rupees to 1270 and retained their buy rating. But the target price cut is basically to account for mark-to-market hit in the recent correction, lower total business return, as well as moderation in flows.
Correct.
These are some of the factors because of which they have cut the target price. But they have also said that in addition to paying 1880 crore rupees for this deal, the senior management and leadership of BNK will be getting something around 500 crore worth of cash payouts and ESOP stocks as well, and which is why a good synergy is very important, and how that plays out going forward will decide whether this is a good acquisition or not, and whether it will flow through in revenues as well or not. But yes, the long term benefits will depend on how the synergies really play out from here. The stock of 361 WAM is down 17% on a YTD basis. Yatin, it has seen a sizable correction, but brokerages are turning bullish, and their target price is well above the 1200 rupee mark.
Yes.
So expect some bit of an upside from the current levels of 1038 or thereabouts on the stock price.
Absolutely, and I think most of the brokerages you read out, expect a 20-25% plus kind of a return from the current market price. Hopefully, this brokerage diversification is something that should keep investors happy. At least, reputation-wise, BNK is a quite a reputed institutional broker, based out of Mumbai. So let's see how does it help IIFL Wealth, which is now 360 WAM.
That's true. Then those were all the stocks on our radar this afternoon. Of course, tomorrow is a market holiday on. From of course US markets, and how global situation pans out, what Trump does,
Yes.
what kind of statements he comes out with when it comes to tariff on allies, and of course Nvidia earnings. Of course, that will be the important pointer to watch out for in terms of of where the IT stocks are headed from here, and of course the monthly expiry as well on Thursday. But with that completely timed out, have a great evening, and of course rest it out. We'll see you back with the markets on Thursday morning. Have a good one. Thank you.